Welcome back to another Trade Alts Technical Analysis tutorial. This is Introduction to SR Levels Beginner Series Volume 2, where we will be covering trend lines. Very basic, but incredibly important tool to have in your trading tool belt. With that said, let's get to the video. So before we get on to trend lines, just a really quick recap and refresher. If you want to pause the video and read through this, it's very important. But essentially, I'm going to go through an example just to solidify what I talked about in video 1. A few important things to remember. The more time support and resistance is tested, the weaker it becomes. And after there is a flip of support or resistance, oftentimes your highest probability trade occurs on the first test of that former support or resistance level. So that's something that I'm going to cover here in this next slide. All right, so this looks familiar, probably from video 1, but this is an example of support turned into resistance. So basically, you have price come down into this level, buyers step in, and you see a push higher, which basically gets faded again. You come back to this exact same level where there were buyers previously defending it, and price gets defended once again. So there's enough buyers here to stop price from moving lower, and then you get a subsequent bounce. And in this particular instance, the reaction is a little bit weaker, right? So you don't get as high as you did on this occasion. And price comes back down to retest this a third time. So you have 3 touches. Buyers, again, there's enough buyers to defend this level. So you get another bounce, another move off of it. But then eventually, when you come back down for your 4th test, the sellers overwhelm the buyers and break through this level, which this was a former support level. Price moves below it. Now you would expect that this former support level is now a resistance level, which is exactly what happens in this instance, where price moves back up close, to test this former support level. Now there's sellers that step in to defend this level yet again, and price moves lower. So this is basically, again, an example where buyers defend a level, and eventually the sellers overpower the buyers. There's not enough buyers left at this particular level to defend it. So price moves lower and, comes back up for your retest. There's the sellers are really strong here. Price moves lower. So getting into the topic of today's video, which is trend lines. And what trend lines are, they're basically very useful support resistance diagonal lines that represent support and resistance levels on price as it follows a particular trend. So the first video, we covered horizontals. So horizontal support and resistance. Now we're going to look at diagonal support and resistance. So it's very similar, but just a little bit different, which you'll see here shortly. But we're going to cover trend lines. So in a future video, which is why the reason I'm covering trend lines first, because we are going to talk about pattern trading in future videos. But this is very crucial theory to understand before we get into the pattern trading. And then obviously in the VIP tier, if you're part of that, over in Discord, we have an advanced series also coming up very soon, which we have some really, really awesome theory to discuss in those videos. So that is the topic of today, trend lines. Let's get to it. So trend lines, how are they drawn? So first you use the trend line tool on TradingView, and you're going to be looking for important high points to connect to each other. So connecting high points in a chart should result in creating a resistance trend line. So when you're trying to create a trend line to chart resistance, you're only looking for high points that connect to each other all on the same trend line. If you're connecting important low points in a chart, it should result in creating a support trend line, which is what you are seeing here in this example, which we're going to be going over in much greater detail shortly. But you can see here, this green trend line governs support, right, for this trend higher. So that's why you would connect. You're basically looking for important lows in the chart to connect to each other to form this line that you see. And then once you've identified those important points, either highs or lows, depending on, if you're trying to chart support or resistance, You would then extend the trend line into the future to see if it's relevant to other price action. Or if the line extends into the future, you know, like price, like for this example here, this line goes into the future. We haven't had any price action since then. You would be looking for potential reactions at those trend line levels. So you would expect for this trend line to continue to hold up as support, for example, into the future, even though price hasn't quite made it there. So you would be still looking for reactions there. And as far as wicks or candle bodies go, so this is kind of, this is one where, I mean, people really have a difference of opinion. And what I mean by that is, are you looking, are your low points or your high points, are you looking for wicks or candle bodies? For myself, I prefer wicks, as they're the true representation of the tops or bottoms. So like the price made its way up, you know, you might have a high wick somewhere, but the fact is price traded at those levels. So I'm interested at those levels. So again, I prefer wicks, and I draw the majority of my, the majority of my trading honestly is done by wicks, but bodies are okay as well. It's really what works best for you. And, you're going to have your own technical analysis style. Like some people really just prefer to use candle bodies, and that's acceptable. You know, if you have a good track record and you're making money doing it, that's all that matters. But I prefer to use wicks as much as possible. So some key notes when it comes to trend lines. I think most traders use the 3-touch rule in order to validate a particular trend line. I agree with that. The more touches, the better, typically. Although you do have to worry about when you have too many touches, then you could risk breaking that trend line, obviously. And there are some particular instances where I do think 2 touches is almost appropriate. And can offer better trades in some cases. But 3 touches is the general rule that most traders follow. And again, wicks or candle bodies, I talked about this in the previous slide. I prefer wicks. It's very important. So that's just, again, that's what I prefer. And with that, let's get to some examples. All right, so here is an example with Bitcoin. And basically, we're going to be looking for important points to see if we can create a trend line. Okay, so the first thing I can tell right off the bat if I'm looking at this price action is you kind of have these series of lower highs, right? So you have an important high that was made here after price, came up off of this bottom, got rejected at this particular level, which is close to $10,000. Big move to the downside, comes up, makes another high before it's rejected yet again. So you have 2 important highs that could be important later on in future price action. So let's create a trend line and see if anything lines up. Which again, you can do this as soon as this high is made here, you could create a trend line using 2 points to give you an idea of possible future important support resistance levels. So we're going to get our trend line tool, which is right here on TradingView. You can also, there is a shortcut, Alt-T, if you wanted to not have to click on this and have it automatically brought up, you could use that shortcut. Whoops. But anyway, we're going to start here again at this really important high. And then we're going to connect it down to these important lows right here. Make sure I have this lined up exactly how I want it. And one quick note is you see that there's 2 wicks here, 2 wicks here. So does this count as 2 touches or 4 touches? For me, it counts as 2 touches because I really want to see, it helps that you have multiple touches within a small time frame showing you that this level is indeed important and valid. But as far as trend lines go, I really want to see space in between, I want to see space in between touches. I don't necessarily want 3, 4, or 5 touches here and then thinking like, oh, this is a valid trend line, and then price, doesn't respect it later on. You really want to see this respected over time. So depending on what time frame you're trading on, for this is a daily chart, for example, you definitely want to give yourself some space in between to, as far as determining whether or not something's valid. So I could draw this out all the way manually, or something that TradingView does that's helpful, and it's kind of a shortcut. You can actually right click it, go to settings. So you're right clicking your trend line, go to settings, And you can extend these lines on your, you can have TradingView do it for you. So if you wanted to go up to the left, you can do that. Or you can extend to the right. And it will literally, you know, infinite trend line to the right. That way you don't have to, you know, like basically if you think that this is going to be valid for a long time, or if you just don't want to pull it manually, whatever, this is a shortcut that you can use if you would like. So what do we see? Well, you have your first touch, price backs off. Second touch, price backs off. Where's your third touch occur? Over here. So you have your first touch, resistance, right? Price backs off. Third touch, resistance. Price is not able to push above this now technically confirmed downward trend line. And then you get this big move to the downside. So like you're not going to see this every time by any means, but this is an example of another form of confluence, basically using this trend line to tell you there is a lot of resistance even down here, right? So first touch, second touch, big resistance. Third touch, price cannot get above this trend line, huge move to the downside. So if we scroll over, because this is way back in 2018, is there any, like, does this trend line stop being valid? Let's take a look. So what do you notice about that? So the trend line continues. The next time that price comes up to meet this trend line, you can see that this trend line ends up getting broken. And for those of you who were trading in 2018, 2019, you would know the significance of this general area that we came out of. Once we broke this trend line, which by the way, your first initial, what I would say your first initial point is back in May of 2018. Well, this same trend line, you know, almost a year later ends up being very important, as once price is able to break through this resistance trend line, guess what happens? You have a massive move to the upside. So again, not always going to happen, but in this particular instance, you had a really nice trend line that governed price action for an extended amount of time and gave you some nice potential trades based off of that. So let's go to the next example. So example number 2, Cello USDT. This is an example of your first major low actually being right on the first day that it started, like right when it listed on Binance. So this ended up being a low. This is kind of one of those gray areas where you can count this as a touch or not. I would count this as a touch because it doesn't come and touch your line exactly perfectly. No, it doesn't, but it's very close. And then when you come up to this third touch here, is this valid? Absolutely, right? So, you know, you could basically judge for yourself if you think, you know, once you get to this point, do you only have 2 touches or 3 touches? For me, I would say 3 touches. Some people might be really picky and really want to see like it actually touch the line, but for me, this is good enough. Regardless, even if, you know, so again, we come here to your third touch, really nice push off of it. Regardless, if you think 3 or 4 touches is, or you know, whether this counts as a touch or not, you get another one here, definitely confirms, right? And then you get a big move to the upside. So every touch that you've seen, right? So here's a first touch, nice move up. Here's another touch, nice move up. Another touch here on your trend line. Definitely 100% confirmed by now. Doesn't matter how picky you are about your touches. Another really nice move to the upside. And guess what? Price comes right back down, wicks through a little bit here, starts to consolidate a little. You get a few more touches. Nice move to the upside before finally exhausting this trend line here and moving to the downside. And even better, so again, when you have a very important support that, you know, this has been support since basically, technically since it started, what happens a lot of times is it turns into resistance, right? So if you zoom in here, your support trend line is lost. Then you get your back test, rejection, and price moves away swiftly. So this is a really good example of an SR flip or a support resistance flip. What was once support survived 1, 2, 3, 4, 4 or 5. I still say just 4, 5, maybe 6 touches, finally gives way, then is back tested as resistance. Resistance holds up and price moves away in a fast manner here. So this is a great example of not only a trend line being incredibly well respected, and for those of you in Discord, you might know that we actually, I actually was trading this, but you also have the SR flip back test as, in this case, resistance, and then that being respected. So this is a very nice chart showing you kind of the entire support and resistance all in one. So let's move on to another example. So here we have Cirrus Logic. So this is a stock, right? So this type of analysis obviously works in traditional markets, but that's the thing, like everything that all of the videos that I share, it works in multiple markets. It works in all markets, right? It doesn't just work for crypto. So in this example, again, we have a stock. This is on the weekly time frame. Every candle you see here is 1 week of price action. So we are literally starting in January of 2009. You see how crazy this is. So again, you have a trend line from 2009. We have a very important, pretty major low here, like $2. This, again, this is similar to the Cello example that I did. Does it like perfectly touch your trend line? No, but to me, it's close enough. You definitely have your second or third touch here. So this to me is already a trend line that I am interested in. And then what happens? So you're going to move up. I mean, you can see like it starts to get almost hard to see because this is in 2009. Price moves up majorly away. So you're starting around $2. Price moves up to $45 so far. And look at this. This is your same trend line. Now 5 years in the future, getting hit and respected. $45 all the way down to $17. But again, this is 5 years of price action. So you get your bounce. Price moves up. You get another bounce. And you fail here. But it's actually reclaimed. So you have this gap up. And you're back above your trend line. So this is another example of, or this is an example of kind of that warning that I gave in the prior video and in one of the previous slides, is that just because you lose a trend line, it doesn't necessarily mean that it's guaranteed to turn into resistance and then you move lower. It does a lot of the times, but this is one of those instances where you basically reclaim this long-term trend line and price moves higher. So again, now we're 5 years later. You zoom out, crazy move all the way up to $72. And watch this, right back here to where? The same trend line in 2019. So you've been following this trend line all the way from 2009. 10 years later, still valid. Price obviously moves up really high. And now we have this same trend line. Again, I use that, I basically have it extended all the way right. You can set an alert here if you want. So if you want to be notified in the future, if this trend line is hit, which I would suggest doing, you can actually right click it, add alert on trend line. And then you could just type in like major trend line support or something like that. And the next time, well, assuming you have the premium TradingView, unfortunately, the rest of them, they run out after 2 months. And I think I don't know how likely it is for CRUS to move down to this trend line within the next couple of months. But if you have the premium plan on TradingView, it never expires. But anyway, the next time that price comes down to this level, down to this trend line, wherever in the future that it is, because obviously it's ascending at a pretty good clip, right? I definitely would want to be notified because yet again could offer a nice trade. So we're gonna do one more example. The final example, Cheesecake Factory. This starts again 2009, where you have your first. I mean, this is a major low. Right down here is sub $5. Price moves off. You get another basically higher low here. It creates a higher high. So now you have a bullish trend. So these 2 points, very important lows. So connecting a trend line from this very low to this wick low here is a good idea typically. And then it's extended way out into the future. So again, this is 2009. And look at how long price spends away from this trend line, right? And then you come back into the trend line finally, was it 7 years later in 2016? And price comes back down and touches this, basically the trend line that was started from these 2 points, right? Way back here. Price comes back in, you get a nice bounce. Price comes back to, again, to the same trend line, gets another bounce, yet another test of this trend line. So this is like 5 tests now. And price moves off before coming back to test this trend line again for the 6th time and fails. And you basically get a really big move to the downside. But again, you have another trend line that lasts, and when it comes to stocks, you have tons of price action history, right? But very important trend line that started way back in 2009. That's still valid all the way up until here. Now what happens? Well, ignore this one from now. That's the next the next example. But even still, you have price come back up into the same trend line and you're getting reactions. You see how there's no closures until you get here? So there's no closures here, but it's still reacting off of this same trend line before it fails and then price moves lower. So here is another example. I'm gonna actually delete this, that way you stop looking at it. I'm gonna hide it. But here is another example where you basically create your low, price comes back up, tries to push higher, it can't, gets rejected, makes a newer low here. So this high, right, basically this lower high of this high is an important level. And then price comes down, comes up to this general area, and then is rejected, right? It's like kind of toys around right here at this trend line. You have some wicks through, that's okay. Again, this is kind of where you can use candle bodies or the wicks of the candles. But if I know that I have a pretty important high here, then if it comes through the candle bodies, but you see wicks poking out above it, that's okay with me. And then price backs off again. You make another lower low before another reversal attempt, and look at your wicks here. So this is telling you, right? So if you're not drawing this trend line from here and you're drawing it, let's say that you're trading here, this is the proper way to draw this trend line. And again, you have your wick up, rejected, price moves lower before you get another test of this support. I'm sorry, another test of this resistance. 1, 2, 3, 4, 5 touches. Price gets, buyers get exhausted trying to push up through this very big resistance level. Price cascades down. Certainly doesn't help that this was coronavirus, by the way, right here. But this is another valid trend line on Cheesecake Factory. Moving forward. So I'm going to hide this one so that way we don't look at this anymore. So moving forward, you have a very important low here. Very important low. And if you look at this trend line, you have multiple touches in this general area right here. You have multiple touches, 3, 4 touches. But price has basically, advanced very rapidly, very aggressively, very bullish. and now price is drifting down. So knowing that this trend line is likely valid, I am very curious to see what happens if we do indeed get another trend line touch here at some point, which I think we will. Doesn't, you know, when it happens, I don't know, but certainly sometime in the future, you know, whenever price does come to touch this trend line, maybe you want to set an alert. Maybe it could offer, you know, if there's, especially if there are other reasons to take a trade here, other types of confluences could offer a nice opportunity there. So as I'm wrapping up the video, I just wanted to share this screen. If you want to pause and read it, feel free. It's just more keynotes, and it's very similar to video one in the sense of, you know, when you're dealing with support and resistance levels, as trend lines are support and resistance levels, just a few important things to remember. And so that will wrap up trend lines. So I hope that you found this video useful. Obviously, we're going to have more support and resistance related modules coming up very soon. That being said, I hope you found this video useful. Take care, trade safe out there. We'll see you on the next one.